History repeating. JP Morgan and the Rothschilds. Here we go again. Hi, everyone, and welcome to another episode of Insights, brought to you by Ainslie Bullion and the Gold and Silver Standard. Today, we welcome back Alex, who's been looking at, she's been looking at history, and I think this is going to be a bit of a feisty one today, because when I was reading through some of that, I went, this is just mind-blowing stuff. It's all there. It's all laid out for us. It's history. We shouldn't be a surprise, but when you put it all together, it really just is for quite compelling reading. So how are you going today, Alex?
I'm going well again. How are you?
Very good. Very good. Just all of it together, I was looking at today going, man, yeah, how is this allowed to happen? How was it allowed to happen? How do we get in these situations? There's a lot to unpack. So I thought maybe the process today is if you could maybe take us through a bit of what you talked about in the article, some of this history, because I found it fascinating. But could you start maybe by taking us right back to the beginning, 1873, which was the creation of the gold standard? And we don't usually talk about the creation of the gold standard. We often talk about what happened later with Nixon and the end of the gold standard, but what actually caused it all to come about? Because it's really a great place to start the story.
Yeah, so you and I constantly look in history and talk about that it's unprecedented what's been going on lately. You and I have discussed many different eras and tried to look for some similarities. And I feel like this time we've sort of got one. So I'm feeling good about this one. So going back to 1873, what had happened was that was basically the collapse of what was known as like a bimetallic standard. So gold and silver were the coins used around the world. But what had happened in 1873 was the US was mining most of the silver. So they're the only ones with the silver. And Germany said, enough, we're just gold standard. So what it did was it collapsed the price of silver. And in turn, that caused deflation and collapsed the railway bonds, which was this big speculative bubble going on due to industrialization in the US, where they were building huge railway lines everywhere. And it saw these bonds. So Europe needed to liquidate bonds, as did the US. So a mass liquidation of bonds, and 60 railway lines collapsed during that year. So was sort of, looking back, comparing it a little bit to the tech bubble, this overinvestment, excitement in this new technology led to speculative bubbles and an ultimate collapse. So what the US government did in response was it enacted the Coinage Act of 1873, which was actually the gold standard. So it wasn't bimetallic standard anymore. It was just gold. And the rest of the world, Germany obviously started it. So the rest of the world jumped on board and gold became the main medium for trade.
So that's really interesting, because when we look at, and I know it's something we haven't explicitly talked about yet, but we're starting to talk about it generally, the rumors of potentially moving back to a gold standard through things that are going on in the BRICS and things like that. It's actually quite important here, because you're saying that the gold standard actually started outside of the US, really. The US just adopted what was sort of already going on anyway.
Yeah, well, the US had all the silver. It's just, if someone has all the something, someone else is going to fight it. So, you had Europe, who'd mined all their silver centuries ago, turned around and said, no, thanks, we'll just do gold. So, it left someone standing there with a whole heap of silver and nowhere to sell it.
Yep. That makes sense. So, oh, sorry, I was just going to say, what I really want to get into this next bit of what happened, because this really, when I was reading about this manipulation of JP Morgan and Rothschilds, that's something that I know lots of customers, when they speak to me about gold and silver, they're always very interested in this particular topic of how you had these very big players come in and manipulate. And this was the start of all that, I think. So can you maybe talk to us about what happened then?
So JP Morgan basically started in 1871, which with 1873, the collapse of bonds and all this chaos is not a great time to start in business unless you've got a little bit of cash and you can pick those bonds up for a dime a dozen. So by 1885, JP Morgan was one of the biggest railway owners in the US and was buying it all up. but he didn't become the biggest until what happened even 10 years after that. So around 1893, in response to all the silver being mined in the US had kept buying the silver from these mines, and was still allowing a weird trade with silver and gold internally, even though the rest of the world wasn't really doing it.
Mm-hmm.
So what it meant was that Treasury started running out of gold, because the silver miners would mine silver, go to Treasury and say, here's some silver, give me some gold. So Treasury, which part of the Coinage Act or one of the other acts, I'm not 100% sure which one that is, but they needed to have $100 million in gold reserves. By about 1st of February 1894, it had gone to 66 million. So on the 1st of January 1893, you had 121 million, and the 1st of February 1894, 66 million. So nearly halved in about a year. So the government then put out 4 subscriptions and said, right, here are some bonds, 5%, 10 years. We're going to buy more gold, bought more gold, and there was a run. So it was called the hot money movement at the time, where all these people with the bonds and banknotes would go to Treasury, swap it for gold. And so every time it'd bump up, it was depleted, and it became faster and faster. So this hot money was moving the gold from the US over to Europe.
Yep.
So the government tried 4 times to stop it and basically gave up. And they went and signed on the 8th of February 1895 something called the Morgan Belmont Syndicate. And it was a contract with a veiled group of financiers, JP Morgan being one of them, Rothschilds another one, that said, give us some gold, we will give you bonds, 30-year bonds at 4% interest rates, but you need to stop the flow of gold. You need to manipulate our currency to stop the flow of gold. So they signed a contract with these financiers saying, manipulate the exchange rate.
But not openly and publicly, of course.
Well, the syndicate was known, but no one knew who was in it officially.
Didn't know who was in it, and probably didn't know what the actual mandate of that syndicate was.
Yeah, so it was quite veiled. And, there were articles in the newspapers at the time saying, don't sell your gold overseas because the syndicate saved us. You'd be paying more on debt. So that there was basically moral suasion where this syndicate turned around to all of these other financiers and all of these, bondholders and said, don't sell gold overseas, we've helped you, and don't sell bonds because we will give you discounted bonds. So their 4% bonds that they got for 30 years, within 8 days of this contract being signed, they bought it for 62 million and sold it for 68 million. And all their friends who were taking all the gold out of Treasury, they said, you can have some discounted bonds. So they, gave everyone a pat on the back and gave everyone a nice handshake, and everyone agreed to do it. But it was ultimately manipulation.
That's mind-blowing to think, isn't it? It shouldn't be, because it's not like we haven't seen that similar process unfold in more recent times, many times throughout history. But it's really not surprising that everyone's so cranky and gets so jaded when they hear terms like JP Morgan and Rothschilds being involved in the back end of deals.
Yeah. And what was fabulous about the whole thing, and utter respect, is by 1902, JP Morgan was the biggest railway owner. I think he owned 5,000 miles out of 33,000 miles of rail. Because what had happened as the gold stopped going to Europe, the Europeans again liquidated some railway stocks, and now JP Morgan's made all this money from this manipulation. So he bought the railway stocks and started controlling trade through the US by owning more and more rail. So it was just pretty interesting what happened. But it's not the first time the government has looked to JP Morgan in particular, and I'm sure Rothschilds in history as well,
Yep.
to help get them out of these situations.
That's right. It's sort of, it has actually become the precedent now, hasn't it? That you turn to these private large entities to bail you out when trouble strikes.
Yeah, and I mean, look at this First Republic deal. You know, we know that JP Morgan recorded a profit on it. They're saying $2 billion to put it within their business. I can't see $2 billion for a small bank inside JP Morgan as a cost, but that's fine.
Yeah.
So they've obviously made quite a bit of money out of that. And not only that, there was a law of 10% model in the US where banking couldn't be bigger than that. Well, that law was broken too.
Yes.
So,
yeah. Throw that out the window because we need your deep
help.
pockets.
And
Yep.
the outcome of these two things is a pseudo monopoly in rail and a pseudo monopoly in banking. So we've ended at the same spot and the same company at that point.
And more than 100 years later, it's the same game still being played.
30
So
years later.
absolutely crazy. So let's sort of pull this together and bring it home for where we are now. What is the modern parallel here, do you think? What lessons can we draw from that period of time and what was going on then to where we are today?
Well, the comparison is 1873 was the Industrial Revolution. Now, the Industrial Revolution was amazing, but what gave it, what really helped grow it was the movement of goods. And so that was the steam engine. So rail became the thing. And you had, like we said, 60 railways collapse in the US in 1873. So everybody and anyone was building a railway. Just like in 2000, anyone who got an internet address logged it on the stock market in hope of making millions of dollars. And we all know what happened in the tech boom of 2000. Well, it's a lot similar to what happened in 1873. Then what you've got is in 1893, 96, you had deflation. Deflation because people stopped trusting banks. People made runs for money. Currencies just became, over speculated, I guess, a little bit like what happened in 2008. And then now then you had, I guess, COVID in the middle and World War I in the middle, which saw huge monetary and fiscal money coming into the market. And after both those periods, there were huge levels of inflation. So in the 1920s, inflation was running at about 25%. So, compare it to now, it's a similar thing to what's happened. So you've got the bubble, you've got the deflation, you've got the shock, and you've got the inflation.
Yep.
So it's, very similar. And then you've got JP Morgan coming out with a very nice monopoly.
And following that through, like I suppose the logical conclusion to that is what happened next. Like when you think about if that's what we've gone through, what does that mean? Because I know people have been using the analogy of the 20s and saying, well, does that mean we're in for the roaring 20s, or does it mean we're in for the end of the 20s and the start of the Great Depression? Like, where do you see us fitting in
the
that?
time periods have been shorter. So this time they're about 10 years between, whereas back in the 1800s, it was about 20 years. So it's probably about half the scale.
Yep.
So if we're in 24 and the roaring 20s, the inflation stopped in about 1921. So you had about 8 years of goods. So where does that leave us? Maybe 2025, 2026?
Which
all know
lines
what
up with a few
happens
things. Yeah, that's
We
interesting.
all know what happens in 1929.
That's right. And that is something that does have to be on our radars, because I think from my perspective, I look at it and go, well, surely we don't go into that exact same situation again. And history is never the same anyway, but we don't go into that situation because they'd be much quicker to flood money into the system. But as we've been pointing out recently, the debt is just getting almost to be a problem in and of itself, where the compounding nature of the debt means that the compounding nature of the interest payments on that debt become completely unsustainable. So if we're forced into a position where you can't just print your way out of it and you do have to actually have some sort of austerity, well, that definitely could lead us into a Great Depression style collapse.
Yeah, I mean, definitely governments and financial institutions have learnt to control, the deflation, inflation a lot better than they used to. But, we also know that the pile of debt is so big now that it's going to be hard to shovel any way out of it.
Yeah, at some point it becomes overwhelming for the system itself. Yeah. Well, Alex, thank you as always. I knew this would be a good one because the moment we dig back into that history, particularly if it's a bit of history, it's a little bit further back than what most people are aware. It always ends up being fascinating to see what happened then, but more importantly, the parallels with where we are today. So thank you very much for that.
Thank you very much. Same names. It's always very interesting.
Well, particularly interesting when it is literally the same names. Like we're not even just drawing an analogy; it's
No.
the same people. But anyway,
and back then they were told, go and manipulate gold.
And many would argue that's what they've been told again. But we'll see how that unfolds. Thanks everyone for watching. Remember, any questions, comments, reach out on those social platforms. We do appreciate those. That's us for today. We'll be back tomorrow with Branko, who's back from overseas. So that'll be exciting to discuss all things markets and metals. Until then, have a great day, everyone.